Hello everyone, my name is Rainer and welcome. So last week we did a macro analysis on the markets and we covered quite a bit actually. We covered markets like the indices, the bonds, the FX, metals, and we did quite a bit on the volatility, talking about correlation and looking at where the money is flowing in and out. And I can conclude that it was a pretty successful because traders did leave positive comments and feedback that they really did enjoy it and they kind of understand where the markets are linking up to one another. So with that going forward, I will look to actually do such analysis on perhaps every 2 months, so as to give you guys an idea on what's going on around the world. So that's for last week, and this week what I look to cover is I look to give you a trade update on my dollar yen trade, a trade review. Then we'll talk a bit on the Aussie dollar as well as crude oil. So with that, let's move on and talk about the dollar yen, which I got stopped out of. So this is the chart of dollar yen, and in green is where I went long and red is my stop loss. So at this point of time, taking you back a couple of weeks back, I was actually long the dollar yen because of my bullish bias and because of I saw that the 108 level seems to be a decent support level and it was a good opportunity to get long. So I did got long, and let me walk you through this trade and watch what happened. So walking you through, you can see at this point of time, price actually attempted to test the previous high. At this point, I think I was up about 1.5 R on this trade, and shortly afterwards, look what happened. So price came down lower, and came back to my entry point. So at this juncture, I was still thinking that price is still in a range, and I have the bias of the trend. So the trend is actually still up. So it has not proven me to be wrong just yet. So because as price is trading within a range, you wouldn't want to be cutting yourself out of the trade at the low of the range, right? You only want to get out of the trade should price breach the range by a decent amount. So the decent amount that I used was 2 ATR stops. So at this point of time, you look at the chart, it is still contained within the range and no reason for me to move my stops or manually exit the trade for a break even. So you can see shortly afterwards, price rally a little, a final last burst of rally, and finally traded lower and eventually stopping me out over here. So I got stopped out, I think last week or a couple of weeks back down here, when price hit my stop loss. So there was no regrets in this trade at all. Okay, there's nothing to sort of tell myself where did I go wrong, because it was a perfect trade for me personally. I followed my rules of trading, and this is just part and parcel of trading. Get out of a loss of 1 hour and no qualms about it. So that's for the dollar yen trade, and you can see right now I think price traded lower, and right now attempts to back to my entry where I got stopped out. So basically I'm still bullish on the dollar yen, and I'll look to get long should opportunity arise. But we won't talk much on the dollar yen because this is just a simple trade review that I'd like to share with you guys. Alright, so it's a good trade, although it's a losing trade. So just to share with you something about winning trades and losing trades. Alright, a good trade is a trade whereby you follow your plan and your rules. Alright, so a good trade can result in either whether it's a win or a loss, but nonetheless it's still a good trade. I'll tell you what is a bad trade. I'd like to share with you something on what is a bad trade. Whereas a bad trade, you can still make money on it, you still can win, but because you did the wrong things and you were fortunate enough to result in a win. So an example of a bad trade is you entered a long and price went against you. You average in because hoping that price would just retrace a little before you can get out at break even or slightly positive. So you were fortunate enough perhaps to average in, and price in the end managed to go into your direction, which result in a win. But to me, if you ask me, that is a bad trade because you're simply gambling and trading on hopes instead of a structured rigid plan. So that is a bad trade. And also bad trade can either give you winning trades or losing trades. So depends on whether you're so-called lucky or not. So good trades and bad trades. So do understand the difference between them. Both of them can cause you to win and lose. However, you need to understand the difference between why you win and why you lose. Alright? You could lose and still execute a good trade, and that you should not actually blame yourself for it, because I would say you've done a good job. So that's for the dollar yen. I lost on that trade, but to me it was a good trade. So moving on. Next pair we look at is the Aussie dollar. So looking at the chart of the Aussie dollar is looking at structure, we can see that price retested this level over here. So if I were to round it up, it's about around the 97 level. So price had a consolidation sometime in November 2012 around here. Then you watch price broke out of the consolidation, right? Hover around this support level at 97 for a while before collapsing lower. Then price rallied a retracement, and where did it test? Retested to previous support turn resistance. So price rallied to this level, then couldn't rally higher and before trading lower once more, taking out the lows over here. Then price did another retracement, and this time around the retracement it couldn't even retest the previous resistance over here, and then it consolidated a little within here and here, and then it traded lower. So right now, what is price doing? Price is, if you ask me, is I would say consolidating between this area over here. And let's look at it from I would say a time, I like to call this a time price analysis. So previously, when price came back and test this level over here, within a couple of bars, which is equivalent to a couple of weeks, price actually traded higher. Right? This tells you that at this region here, let me look at what this price is. It's about 87, okay, let's call it 87. 87. When price traded 87 the last time round over here, within a couple of weeks, price actually rallied higher and and stalled over here. So if you understand price time analysis at this point of time, what it's telling you is that price is actually undervalued. That is why it could actually stage such a 800 pip rally within a short period of time, because the markets, the traders felt that at that level, price is actually undervalued. So if you look at it from I would say a layman term, right? For example, you go to the market, you usually every week when you go to the market, fish is selling at about, say, within the range of $8 to $10. And one fine day you come to the market and you realize fish is selling at, say, $4. You say, hey, it's below the usual value you're always paying for. Fish is trading at $4 today. Selling at $4 today. So what will you do? If you know that the fair value of fish is usually in the range of $8 to $10, what you'll do is you buy more fishes. Am I right? So you'll buy more fishes, and everyone around the world will think that fish is actually undervalued, and all of you start buying more fishes. So prices of fish will slowly increase from $4 to $5, $6, $7, and back towards its fair value range of $8 to $10. So that's what happens when price is undervalued. People come in and lead to a huge panel of demand and push back price towards its fair value. So looking at this from a currency perspective, so right now price has been trading in this range for 1 week, 2 week, 3 week, 4 weeks, almost a month now, at this 87 level, where previously within 1 or 2 candles it will push price away from that level. So what that is telling me is that the fair value of the Aussie dollar may not be any higher anymore. This level right now where price is trading within the 87 region may be the fair value. So because if you look at it from the perspective I mentioned earlier, if it was really such an undervalued, price wouldn't be hovering at this range for such a long period of time. But right now it's been 4 weeks and it's still hovering around this 87 level, when previously it only took it a couple of weeks, right? Couple of weeks before it rallied higher. So right now it's telling me that the fair value of the Aussie dollar is within the 87 level, and you can usually use that information and identify trading opportunities. So with that, we look at first we understand that price may now be trading at fair value. Okay. Secondly, what we have is that we have a momentum to the downside, all right, and as well as a downtrend, because we can see lower highs here, here, and here. So we can actually conclude that this is a downtrend, and we have bearish momentum to the downside. Looking at the this bearish red bars over here, right, this region over here, so we can conclude that overall trend and momentum is towards the downside. So with that, let's look at where we can actually look to short this Aussie dollar. So with that, I would say look at the daily chart. Okay, so we have this pair ranging between the highs is here and the lows is somewhere around here. So right now Aussie dollar is trading within a range. So my plan for this pair is actually, should Aussie dollar trade and retest these highs over here, I'll look to get short on this pair with a stop of 280R. Okay, so basically this is my thought process on it, and I felt that the momentum is towards the downside, and traders are actually accepting this region as a fair value. So within this region, the best price that I could get to short the Aussie dollar would be somewhere around the 88.90 area, which is around here. So this area, I look to get short on the Aussie dollar with a stop of 280R. So that's my take on the Aussie dollar. And last but not least, let's look at crude oil. Okay, a product that have been short. So look at crude oil. You can see that the weekly chart price has actually been very bearish. You look at the number of red candles towards the green candles, the ratio is, I would say, very skewed towards the red side. So you look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So we have 13 bear candles, alright? And we have how many green? We have 1, 2, 3, and this week 4. 4 bull candles. I call it, not really, I would say 4 bull, or meaning 4 green candles. So you can see that it's skewed 13 to 4, meaning over the last 17 weeks, 13 weeks of it is a sell-off. It's been selling, and selling. So this week could just simply be I would say, look at this from a candlestick perspective. If you tell me it's just simply an indecision candle, right? No sign of a reversal just yet. So I'm still looking to scale into this trade and short this crude oil. So where would I get short? So looking at the daily chart, you can see the clearer structure of this market, lower highs and lower lows. Again, no reason to be long, but short. So I'll look entries on a 4 hour, and what I'll do is I'll plot in my moving average, a 20, followed by a 50. So, and from here we can see that this product tends to do a repetitive pattern, right? A historical tendency that it respects this value zone, which I'm going to highlight here. So here, and here. So you notice that price tends to respect this value zone, and the 50 period moving average tends to be a good resistance, if you ask me. So opportunity to get short will be in this zone with the stops of 280R. I mean, I use 280R, you could use 3 or 4. It really depends on your risk management, and to ride the trend down lower. So that's my take on crude oil, and that's all I have for you guys this week actually. So if you guys do enjoyed it, I hope you guys have a great week ahead, and let me know if you have any comments or feedback, because I actually readily accept criticism if you have any, or feedback, because that's how I feel that we do improve as individuals, be it in trading, be it in your relationship in life, be it at work. If you're not taking any feedback, or comments, then it's very hard to move forward and improve yourself as a whole. So yep, that's what I strongly believe in, and so feel free, talk to me, and if anything, drop me an email. So with that, I wish you guys good luck and good trading. I'll talk to you soon.